After 4 to 5 bars, get out of the trade. Okay? Any questions on that, guys? It's called a time-based stop, and it's used to your advantage because you're using price to tell you whether or not you should stay in the trade or not. All right? Tear, it doesn't matter the angle of the Atlas line. What's important is whether price is above or below the Atlas line. Jerry, you have a few options for a stop, whichever happens first. Either you hit your profit target, either you get out at 4 bars, or it hits your catastrophic stop. So you have 3 different stops in place, whatever happens first. Okay? Jerry? Okay. Larry, how about entry on pullback if the red bar short closes less than 505 on the downside? The red candle closed strong. I don't think it matters whether it closes strong or closes weak. I think more importantly, it's reaffirming that the trend is down, Larry. It's telling you, yes, the trend is now reaffirming to the downside, and I want to be there. If you wait too long, you might miss that opportunity. After the time stop, Steve, you look for another trade to enter. Yes, absolutely. Catastrophic stop. Catastrophic stop, Jerry, is a stop that you have. Let's say it's at 4 or 5 points. That says if it hits 4 or 5 points, then I'm out of the trade. I'm not willing to go any further. All right, looking at the crude oil right here, guys, you can see that this candle has not closed yet. But when it does close, we have here 1, 2. Well, it's not right now, but we have a minimum of 2. The first red candle that reaffirms the trend down, I'm short. Okay, that's the Atlas line pullback. All right, guys. Now, let's look a little bit at the ABC pattern that I want to show you. ZB, the bonds. Steve, the notes I think are a little bit better to trade than the bonds. Good morning, David. The notes are a little bit better to trade than the bonds, Steve, my opinion. Okay, let's take a look at the notes and the bonds. ZB is the bonds. ZN are the T notes. Good morning, Mike. All right, so here are the bonds. Okay, bonds we had here 1, 2. I'm short right there. All right. Look at my ATR. ATR is about 0.15. It's your profit target right there. Then we had a double bar long on the bonds. Long right there. If within 4 candles, right, it doesn't work. 1, 2, 3, 4. If you haven't reached your profit target, you're out. 4 to 5. You're out of the trade. Okay? Break even, small win, small stop, small loss, but you're out because at this point, well, you have an Atlas line pullback right here too to go long there. 2 consecutive candles, higher high, you're long. Larry. Red confirmation. What is a pullback? A pullback is 2 consecutive candles going lower. So we have 1, 2. There's my confirmation to go long. Okay, Larry? Got it? 1, 2. There's my confirmation to go long. 10 a.m. trade. 10 a.m. trade right here. We're short. We're below the Atlas line, Larry. Right? It's a short trade. Right? Short right here. That's it. Right? After it crosses the Atlas line, you're no longer thinking short. We're thinking long. Right? Cross the Atlas line, we're going long. Right, Larry? The Atlas line is this blue line right here. Jerry, the ATR is what you see down here. This is the average true range of the last 4 bars. Okay? And what this is telling me is that the last 4 bars moved, the price action moved in a certain amount of direction, a certain amount of time. Okay? Or I'm sorry, a certain amount of range, price range. So that tells me that if I want to take a long or short profit target, I should reference the range of the last 4 candles, the average, to tell me what my profit target should be. Okay, Jerry? It's static. Okay? Short, Larry. We entered short here. Short, 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 short. Right there, Larry. No, Larry. This signal was given. It's a double bar short. You're short right there. Okay, Larry? Larry Brush. We had two consecutive candles close below the Alice line. This double bar short signal appeared. We're short right there. Price went down. Okay, Larry? If you have questions on that, feel free to email me and I'll explain it to you further. Forex, it's good for Forex. Okay, do you understand though, Larry? This short entry was there. We're below the Alice line. This occurred, so we're short right there. Okay, Larry? Very simple. The ZN, I prefer the notes over the bonds. They should work in tandem. So in this example here, we had 1, 2, below the Alice line. We got short right there. Price went down. Now we have a pullback, but we need a red candle to go down, which we never got. And now, if this guy right here stays long, it will have an order to go long. On the open, John. It's the open. It's not the close of this red candle. It's the open. The open. The signal was generated at the close of this candle here. You're welcome, John. So the signal is generated on the close of this candle. When this green candle here closed, it confirmed 2 consecutive bars. All right? And now we have whipsaw, so we don't have 2 consecutive yet. So we'll see what happens there. I like to have my coffee early in the morning. And Johnny, another thing is, if you try to trade the market open, it becomes a little bit chaotic. You see how we got a double bar long there? It just appeared on the chart. So I try to stay away from the first 15 minutes of the market each morning because I know that there's a lot of whipsaw back and forth. Okay? Very good, very good. You're welcome, guys. So I'll leave that up and see how that turns out. Okay? I'd like to talk to you a bit about the ABC pattern. Okay? Let's get rid of some of this stuff here. The ABC pattern is a way of looking at each day independently and looking at how the day will wind up. Okay? So let's take, for example, the E-mini, and I'm going to remove all this stuff here. And by the way, I am recording this, and last time that we had it last week, I did record it, but the project did not render because I try to render everything I do in high definition, and it crashed. So I am recording this, okay? There's the recorder right there. So I am recording it, and I'll send everybody out. It'll be on my blog, daytradetowin.com/blog. You guys can get the blog. I have lots of videos and things on the blog, educational stuff. So it'll be there, and everybody will get an email, okay? Hopefully I won't have that problem before, like it did last week. So let me remove here the Atlas line, okay? And let me remove everything here. And let's take a nice, clean chart. And let's understand what happens in each part of the day. Because the ABC pattern is, again, something that traders don't look at. And I look at it on a daily basis. All right? And I teach this in much more detail on how to trade price in the 8-week mentorship program. So this is just a little bit of a glimpse of how it's done. Let's take a look at yesterday, for example. Okay, let's take a look at yesterday. And Richard, on currencies, it is the same as the CME futures, which is for you would be 14:30 if you're in the UK. 14:30 for me, it's 9:30 Eastern Standard, Richard. So currencies start the same as the E-mini. Even though I know that they open a little bit earlier, I set my Atlas line to 9:30. You're welcome. Yes, Johnny, it is the first part of the day. So let's take a look at this ABC pattern. And this was, I'm sorry, not yesterday, the second, okay? All right. Now yesterday, everybody can realize that this is a huge chop, right? All day long. But let's break the day into segments. From 9:30 to